What's going on, y'all? Happy Tuesday to you, and welcome to the second episode of the Hashing It Out live stream. I'm your host, Colin Harper, head of content and research at Luxor Technologies. Today, we're going to be going over the usual mining metrics, hash price, difficulty, hash rate, and ASIC prices. And then for the news segment of today, we're going to be looking at Poolen pausing payouts and switching to a PPLNS payment structure, as well as Paraguay's president vetoing a recent crypto trading and mining regulation bill. And we're going to wrap up with a little bit of an update of what's going on in Texas as the power authority there seems to be capping how many miners they're going to let onto the grid. So a lot of stuff to go through. We're just going to jump right into it, starting with hash rate index data. Alrighty, so to start, we are starting to see hash price really get kicked in the ass recently as a result of Bitcoin's waning price and also rising difficulty. Now, just as a quick clarification for those who don't know what hash price is a way to denote mining revenue potential for a unit of hash rate, and we denote it in USD or Bitcoin. So as you can see right here, at the bottom right of the screen, right now hash price is about 8 cents per terahash per day. So for every terahash of compute power you have, you can expect to earn $8 a day when hashing to a full pay-per-share mining pool like Luxor. So, and as you can see from this 1 month chart, hash price has fallen significantly since August. A series of positive difficulty adjustments that raised Bitcoin's difficulty, as well as, like I said, Bitcoin's waning price, have just really put hash price into a low point. Right now, we're at about, like I said, 8 cents a day. And that's not too far away from the all-time low for hash price, which we saw in 2020. I believe at the end of September, hash price hit 7.25 cents. At that time, this was at some of the lows right before Bitcoin started to rip in the last bull market. And as you can see from this chart, we're not too far from that. Just going to show you all the 5-year really quickly. So, so all of that to say, as you can see here is the 2020 prices. We got down to just below 7.5 cents. So we expect hash price to continue to fall as more hash rate comes online. And if Bitcoin's price doesn't reverse from here, USD hash price obviously will continue to fall. Now, in terms of BTC hash price, we have already hit an all-time low in SAT value. So as you can see here, you can make 411 sats per day per terahash, according to our BTC hash price on hashrateindex.com. And as I said, that's an all-time low. Hash price trades in backwardation, meaning the future value of hash price is always expected to be lower than the current value of hash price. And what is driving this? Like I said, upwards difficulty adjustments. Hash rate has been coming online at a breakneck pace recently. We had a little bit of a lull after hitting 225 exahashes a day. Over the last week, we trimmed about 8 exahashes, but that hash rate is just coming right back online. It's now at 228 exahashes. And I believe that is actually, this is the 7-day average. That's actually an all-time high for the Bitcoin network, unless, no, never mind. We had an all-time high of 234 exahashes on June 11th. So not too far from that all-time high. All we need to do is add on another 6 exahashes to match it and then 7 exahashes to surpass it. But a lot of machines are starting to come online, particularly the Antminer S19 XP, the newest model from Bitmain, the most powerful and efficient machine on the market. A lot of those machines were delivered in July and August, and they're going to continue to be delivered throughout the year. And that's going to send hash rate, just revving back up. We had quite the lull over this last summer for a variety of reasons, like we covered on the last live stream, such as heat waves around the world, or particularly in the United States, that took mining rigs offline in hotspots like Texas. Also, waning mining profitability has just pushed out a lot of higher cost miners. So it led to a dip in hash rate, but it looks like we're revving back up, and we might hit some of those upper bound hash rate projections by the end of the year. Now, taking a quick look at difficulty, you can see what this has done to Bitcoin's mining difficulty. We had the second highest positive adjustment last week of the year to a 9.26% raise. Pretty huge. I believe that the largest adjustment of the year was 9.36%, so not too far off. And this came after two, more marginal positive difficulty adjustments in August. So in August, we had 3 upwards adjustments, and this followed 3 negative adjustments in the prior month of July and at the end of June. So like I was saying earlier, I do not expect too much in the way of downward adjustments for the rest of the year. I expect that we will likely see more of this positive difficulty raising as more hash rate comes online. And it's just going to keep putting hash price kind of in the doghouse. Like I said, we're probably going to see all-time lows for hash price on a USD basis over the next few months, unless, of course, Bitcoin's price does a U-turn, which based on the macro outlook is not looking very likely. The dollar is continuing to strengthen against other international currencies. Hopping over to the ASIC index really quickly. As we spoke about last week, we are continuing to see a kind of flatlining of ASIC prices. It seems that at least for right now, the market has kind of decided that this is a more fair price dollar per terahash wise than we were seeing earlier in the year when prices were still inflated. Now, that's not to say that this can't go lower, right? If we look at where these rigs are being priced right now, realistically, they could probably shed another $5-10 per terahash for new gen rigs before we can kind of see, I would say, a bottom, right? Because if Bitcoin's profitability continues to go down, then rig prices are going to follow it. It's just that right now we're starting to see kind of a stabilizing period where prices are not decreasing in value as drastically as we saw throughout the year. So for last week's ASIC price index update, for instance, it was $34.29 per terahash for new gen rigs. It was $20.15 per terahash for mid gen rigs, and for old gen rigs, it was $10.47 per terahash. Now, quick update on this on our ASIC price index. We will be adding a new efficiency band, the under 25 joules per terahash efficiency band in October. This will factor in new gen rigs, particularly or namely the S19 XP. The next efficiency band will then become 25 to 38 joules per terahash, and then we will keep the 38 to 68 joules per terahash and over 68 joules per terahash bands as well. But come October, you'll see a 4th band here that will give us a little more clarity on newer gen rigs, like I said, like the S19 XP, and also make sure that this the 25 to 38 joules per terahash band, the data is a little cleaner, right? So we want to make sure that we're not muddying it with higher prices, because the S19 XP goes for a premium compared to other S19 and new gen rigs because it's more powerful, newer, and also has a higher efficiency. So that'll improve this data set. We're really looking forward to it. Keep an eye on the ASIC price index for that update, and also for announcements from Luxor for when that goes live. So with all of that said, we're going to wrap up the data segment a little bit early because we got a lot of news to sort through. First and foremost, Poolen has paused payouts because of a liquidity crunch for its mining pool. So Poolen is one of the largest Bitcoin mining pools in the world. I believe it's like top 3, maybe top 4. And it seems as though they are having some liquidity issues. And CoinDesk reporting said that users of Poolen had been complaining about slow payouts or paused payouts since August. And now they are now they've come out and said that they are having a problem processing all of their payments. Now, how are they going to fix this? Well, they're trying to incentivize people to get back onto the pool by offering a zero-fee promotion starting September 8th through December 7th. And for anyone who has 1 Bitcoin or 5 ETH on their pool account, they will be able to get 0 fees for a year. And part of this, again, is they are trying to attract more users and trying to keep liquidity on the platform so that they can process payouts. Now, the other thing that they're going to try to do to fix this situation is switch from full pay per share to PPLNS. Now, for those of you who don't know, the quick rundown of FPPS versus PPLNS. FPPS, what Luxor uses, is a payout structure where miners are paid a payout based on hash price and also transaction fees over a period of time, regardless of the pool's luck. So mining pools sometimes mine fewer or more blocks based on how lucky they are on a given time frame. For full pay per share, the users are not subject to that luck. They are paid a set amount of Bitcoin, regardless of the pool luck, based on hash price, right? So most mining pools use this because most users want consistent payouts. Now, the alternative to this model, or one of the alternatives for Bitcoin mining pools, is pay per last in share. And the in there is in, as you know, in your math textbooks and stuff, for just a given variable. And PPLNS basically subjects the user to luck risks. So, for instance, the most popular pool that uses this right now is Slush Pool. They're the ones who pioneered PPLNS and also Bitcoin mining pools in general, right? And for Slush Pool, if you are mining on Slush Pool, if they mine fewer blocks over a given period, then you earn fewer mining rewards. If they mine more blocks over a given period, then you receive more mining rewards, right? So unlike FPPS, PPLNS subjects the user to the mining pool's luck. FPPS abstracts this away from the user and says you are always going to get a consistent payout based on hash price for however many units of hash rate you have pointed to our pool. So Poolen will be moving to PPLNS on September 8th. They say that other coin payment methods will not be affected. And it also seems that they are suspending swap services. So you can know if I'm reading this correctly, you will not be able to swap your altcoin hash rate for things like Bitcoin, right? So you might be wondering, why did this happen? How is it that Poolen seems to be facing liquidity issues? Well, our COO, Ethan Vera, had a pretty good thread on this yesterday, essentially saying this could be for a number of factors. And before we get into this, all of this is speculation. Obviously, we do not know what is going on at Poolen. They have not come out with further information past that blog post. Maybe we'll get more clarity in the coming days and weeks. But as for right now, this is just kind of detective work and speculation based on what we think is probably happening based on FPPS payout dynamics. So as Ethan says in this thread, the most likely thing that has happened is that Poolen just had a streak of bad luck. They haven't been able to have enough of their own personal hash rate online to beef up reserves, and they just simply ran out of enough liquidity to be able to cover all their obligations to their users. There are a few other contextual things in here, and we're not sure, again, if this has really anything to do with it. But they had pool relationships with BlockFi and Three Arrows Capital. The BlockFi partnership goes back to 2020, I believe. And as we know, BlockFi and Three Arrows Capital found themselves in dire straits recently. So it's possible that maybe they were using BlockFi to loan out their Bitcoin to earn yield on it. Again, that's speculation. We do not know, but it's a possibility. Perhaps another thing to look at is Poolen's hash rate token. So for those of you who don't know, Poolen actually launched hash rate tokens, I believe, in either 2019 or 2020. Don't hold me to that, though. But basically, these hash rate tokens were ERC20 tokens that guaranteed payouts proportional to the hash rate that you had via the tokens in wrap BTC. So you could purchase each token represented 1 terahash of compute power. If you bought one of these tokens and staked it with Poolen, then you would receive 1 terahash worth of mining rewards as a result of that staking. Now, Poolen halted these payouts after the Chinese mining ban because they had to move a lot of their all of their operations from China to North America and elsewhere, right? So there was a time last year when they just completely halted payouts for these things because, again, they didn't have enough liquidity because they did not have their mining operations online. And perhaps that's worth noting is Poolen has quite a lot of self-mined hash rate. So not all of Poolen's hash rate comes from users of the pool. Some of it is their own hash rate. And when that goes offline, then their luck goes down, and that can create problems for being able to meet other obligations, right? So that's another thing to keep in mind. And on that, a similar vein, Poolen has not been able to secure as much power in Texas as they originally thought. We will cover this at the end with our news section, or with our news breakdown of a CoinDesk article called "The End of Texas Bitcoin Mining Gold Rush." But basically, they had budgeted for a certain amount of power, and now they're getting much less than that. Again, Poolen supplements some of its user hash rate with its own hash rate, so this could be causing problems with mining luck, rewards, things like that. And Ethan also talks about this in this thread about Poolen acquiring a Bitcoin mining pool, Nova Block. And he said, again, this is all speculation, but potentially they dipped into some company coffers for that, into their treasury to make that acquisition, and maybe that is affecting their ability to actually source enough liquidity to process payouts. Again, one more time, just so I'm covering all the bases. This is all speculation. We don't know what's going on with Poolen, but this is just some of the context to keep in mind when thinking about this. And as Ethan says here, just wrapping it up, as an FPPS pool, it's crucial to have a treasury and capital or credit access on the sidelines to make sure that you can meet these obligations. Again, you're completely, as an FPPS pool, you're completely at the whim of pool luck as to whether or not you will be able to process more payouts or less. So it's always good to keep a healthy reserve of BTC or have credit available so that you can meet these obligations should a liquidity crunch happen. And that is, luck risk here obviously is probably in play, probably the reason why Poolen cannot meet these obligations. And that's why moving to PPLNS mitigates this risk for them, right? Because now you're telling users, well, if we're unlucky, then your payouts are fewer. And if we're more lucky, then you get more Bitcoin, right? So this will help them mitigate that. They're making that switch in 2 days on September 8th. And we'll be keeping our eye on this very closely. And just kind of to show you what has been going on with Poolen's hash rate. This is on the hash rate index pools dashboard. Over the last month, Poolen clocked 10.25% of market share for their hash rate. So that means they own for the last month they have owned an average of 10.25% have processed 10.25% of the global Bitcoin hash rate. And this real-time figure is about 25 exahashes of hash rate. Now, over the last 3 days since this announcement went live, their pool share has dropped to 9.34%, and it represents about 22 exahashes of hash rate. Now, this hash rate, again, the reported hash rate is what Poolen is reporting as having under management. And the hash rate that you're seeing to the right of that is the hash rate calculated based on how many blocks they hit. So a 3-day window is not the best for judging this because there could be, again, a number of factors like luck that affect this, correct? So it's not clear that, that hash rate drop off is miners leaving Poolen, but you can see that their hash rate is decreasing at least on a luck basis. And if you look at over the last week, they had a reported hash rate of 30 exahashes a second, and their real-time hash rate was 25 exahashes a second. So needless to say, something going on there. Check out our pool dashboard on hash rate index if you want to play around with this a little bit more. And also, if you have more questions about the PPLNS versus FPPS structure, you can check out this blog post at the end of Ethan's tweet. Highly recommend it. Very useful for not just learning about those payout structures, but other payout structures as well. All right, moving on to our next news item. And that is Paraguay's president vetoes a bill that would regulate crypto mining and trading. Now, this comes after Paraguay's national conference, the upper and lower houses, passed a bill. Now, this isn't passing the bill into law. It's just saying that they're okay with the bill in its current form. They passed a bill that would regulate cryptocurrency mining and trading within the country. This would require, amongst other things, for miners to register with a national authority. And it would also require the National Electricity Administration, Paraguay's basically their public energy regulator, to set certain standards and for cryptocurrency miners, and also allot them power at a certain rate. Now, Paraguay's president did not seem to think that this was a good idea, so he has vetoed this bill, but that does not necessarily mean that it won't be ratified into law. There's a chance now that the National Congress, if both the lower and the upper chambers ratify it, it could still go into law. Now, you might be wondering, why does this matter? Paraguay can't have too much hash rate to begin with, right? This is true. Paraguay does not house too much hash rate currently. Bitfarms is operating there along with some other larger private miners. But at Luxor, we've been actually pretty bullish on the concept of Latin America becoming one of the, how should we say, mining hotspots in a post-China world, in a post-China mining world, for a number of reasons. And one of which, for Paraguay generates a crap load of hydroelectric energy. I think one of the dams that they share with Brazil actually has a higher annual output than the Three Gorges Dam in China. And so it seems like Bitcoin mining would be a perfect fit for this place, right? Now, whether or not, they would actually have enough power budgeted to bring on more hash rate, that is kind of out of the scope of this live stream. But a lot of that power is actually sold from Paraguay to Brazil because they don't have nearly enough industry or residential consumers to actually soak up all of that energy. So Bitcoin mining seems to be an obvious play here. It could give the country an opportunity to actually monetize energy that otherwise would go wasted, or maybe even make more money than they would if they were selling it straight to Brazil. And even for the amount that they're selling to Brazil, there would be enough left over to have Bitcoin mining operations, according to research that we've done internally at Luxor. So we think, obviously, as miners, that the president and politicians in Paraguay should be a little bit more open to this innovation. We believe that the fears of there not being enough power to go around if Bitcoin miners come to Paraguay is overblown. And we will be keeping an eye on this story because right now it seems as though this bill still has a chance to be passed. Again, if the National Congress and the lower and upper chambers ratify it, then this veto could be overturned, basically, and this law could still go into action. And, Bitcoiners sometimes cringe at the idea of regulating Bitcoin or regulating the mining industry. But right now, mining is still going on in Paraguay. So whether or not this bill is ratified doesn't really change the landscape. But this will give the government an opportunity to actually approach it in a way that might be, how should we say, sustainable and beneficial for everyone in Paraguay who has to purchase power, right? So we'll be keeping an eye on this. We have a report on mining in Paraguay that we plan to release sometime in the next month, but we want to wait to see what goes on with this bill so that we don't publish outdated information. So keep an eye out for that, and we'll be following this story closely. Now, for the last news item, we will be talking about the end of the Texas Bitcoin mining gold rush, which may be a, overstating the gravity of the situation. But this article from CoinDesk's Eliza Gritsky kind of puts into focus a little bit how difficult it is in practice to actually accomplish what we've all been saying in theory, right? Texas has been lauded as the mecca for Bitcoin mining ever since China banned it last year. Now, China still has, anywhere from 10 to 20% of hash rate online, but not nearly as much as they used to. And a lot of that business came to North America, and a lot more still that came to North America fell in Texas because of Texas's unique grid, ERCOT, which is the only non-interconnected grid in the U.S. It's also perhaps the freest market grid in the U.S., and also Texas's abundance of energy. There are a lot of renewables projects in Texas, along with a lot of nat gas and other energy-producing assets. So Texas was a obvious fit, right, for an energy-intensive industry like Bitcoin mining. Now, that being said, it seems now that the state's grid operator, ERCOT, has slowed issuance of new permits to miners. because it seems that they have oversold what they actually could deliver in terms of gigawatt and megawatt hours. Now, this comes after a summer where Bitcoin miners had to shut off in response to grid brownouts and blackouts because Texas's grid was stressed. You know, it gets really hot in Texas during the summer. ACs are turned on the state over. They're set to their max cooling. And some assets like wind, for instance, were underproducing during this time. So when that happens, certain industries or high consumers of energy will shut off. And in this case, Bitcoin miners did that in droves, right? You saw miners like Riot, Corsair, and Argo power down during this heat wave and during the ensuing blackout to actually free up power for the rest of the grid. Now, that being said, with that in mind, ERCOT is kind of slowing down. They issued a lot of permits and power purchasing agreements over the last year to Bitcoin miners, and now they are kind of slowing the reins on this. As you can see from this article, there are a lot of really good things in here. This is a quote from Steve Kennard, of the director of the Texas Blockchain Council. He said, "There's very few or no sites where you're just going to show up and plug in without any work. Even for smaller sites that consume around 10 megawatts, Kennard said, a lot of people have searched for that, and now there are none left." Basically, Texas's grid is kind of at capacity, and they can no longer accept these high energy, these energy-intensive Bitcoin mining operations. Now, does that necessarily mean that this is the end of Bitcoin mining in Texas? No, of course not. But as our COO of Luxor Technologies, Ethan Vera, points out in this article, this will really burn a lot of miners who were promised certain allotments of power, but now they're not going to be delivered, right? While many companies were successful in building out large-scale operations in Texas, Ethan says, some companies did not get as much power as they initially expected, leaving them in a tough position. We continue to see fire sales of transformers, power distribution units, and other equipment that the mining farms can't use due to power constraints. So you can imagine you're a miner, you move to Texas, you purchase all of this equipment expecting a certain amount of power, and suddenly you don't get it. And going back to Poolen was planning a 600 megawatt site in West Texas. The first phase of the site is powered up, and there are 100 megawatts that have been energized, but it looks like the rest is on hold. Now, as for how long it will be on hold, nobody knows, but at least obviously until ERCOT can feel comfortable enough to allot more power to Bitcoin miners. There's a lot more in this article. I would recommend you go check it out and follow Eliza and Ayan's work on CoinDesk. They're doing some great covering for the Bitcoin mining industry. But all of that to say, as I said at the beginning of this, you can say one thing like Texas is going to have all of these so-and-so megawatts online by the end of the year, or so-and-so gigawatts of Bitcoin mining energy online by the end of the year. But practice is a lot different, right? Like theory and actual reality often do not conform with each other. There are real strains on the grid. There are real logistical problems, such as like building out facilities, getting transformers online. And, you can't just print energy out of thin air. And it seems like ERCOT got a little bit ahead of its skis here in allocating some power to some of these Bitcoin miners. So again, not the end of Bitcoin mining in Texas, but certainly something to keep an eye on as the year develops, and bullish for other mining hotspots around the US, right? There are plenty of other states with a lot of energy, and we expect to see an outflow of miners from Texas, or at least miners who are considering Texas looking to other Bitcoin mining friendly states across the union to power up their operations. And that concludes the news segment of the live stream, and we are just about done, y'all. Really appreciate y'all tuning in to this episode 2 of Hashing It Out. Feel free to give it a share, comment, give us some feedback if there's something you wanted us to cover but didn't, if there's something that you didn't like that we covered, or you didn't think our analysis was off, or we could have been improved. Please give us feedback. We're always trying to improve our content in this live stream. And please give us a follow on Hashrate Index and Luxor Tech Team if you haven't already. And also, if you would like to see more analysis like this and to see more mining data and metrics and things like that, Please subscribe to our newsletter at hashrateindex.com/blog. We send out a weekend newsletter every week, and when I can get around to it, send out a weekday newsletter covering in depth a Bitcoin or crypto mining topic of interest for that week. So all that said, please tune back in next Monday at 11 a.m. CDT, and we will be covering more mining metrics and more news. Y'all have a good week. Peace.